Welcome to Armchair Expat, the podcast meant to get you out of your lazy boy and into your new life abroad. I'm Shannon Acton, founder of Bargain Homes Abroad, and I'm riding shotgun as we chase the dream of life beyond borders. Each episode, we'll hear stories from people who've left their comfort zone to explore the world. They'll share their highs, their lows, and their in-betweens, all meant to lovingly light a fire under your bum, so you can stop dreaming about it and start living it. So if you're stuck in your comfy recliner, scrolling through dreamy destinations, wondering what if, it's time to swap that raggedy old armchair for a one-way ticket. Let's freaking go, people. With October 15th right around the corner, the final filing deadline for Americans living abroad, this episode of Armchair Expat couldn't come at a better time. If you're an American overseas, you've probably wondered, am I filing correctly? Am I paying too much? What about FBARs, tax treaties, or those tricky forms no one tells you about until it's too late? To help unravel the confusion, I'm joined by Nathalie Goldstein, founder and CEO of MyExpatTaxes. Originally from California, Nathalie moved to Austria a decade ago and quickly discovered how overwhelming the U.S. tax system can be for expats. Drawing on her background in finance and her own experience living abroad, she built the leading software platform that makes tax filing simple, accurate, and accessible for Americans overseas. In this conversation, Nathalie shares her journey from Silicon Valley to Vienna, how she turned her personal frustration into a thriving global business, and her best advice for expats navigating income, deductions, credits, state returns, and tax treaties. We'll also cover common pitfalls to avoid, what to know if you're moving mid-year, and why keeping good records can save you major stress when tax season rolls around. And a disclaimer, this episode is for informational purposes only and does not constitute legal or tax advice. Every situation is unique, so consult a qualified professional before making decisions on your own filings. I hope you enjoy this episode. Hi, Nathalie. Welcome to the Armchair Expat podcast.
Excited to be here. Thanks for having me.
Yeah, thank you for joining us. I'm super excited about this conversation because I think a lot of people have a lot of questions when it comes to taxes abroad. But before we get into that, I'd really love for you to share a little bit about your background and how you came to be living abroad.
Yeah, so I'm Nathalie Goldstein. I am from San Jose, California. I live in Vienna, Austria now for like 10 years. It's pretty crazy. I moved in 2015 and really enjoy being in Europe and the summer. But I also feel that we're now heading towards the winter. And these are the moments where I'm like, maybe I miss California a little bit. Essentially, I moved abroad for both work and love. And I was in Silicon Valley and I thought, this is where my life will be forever because this is the place to be. This is the epicenter of the world. If this is where you find success. And then I pretty much got knocked off my feet at 21 when I realized I'm not really happy. And so let's just try something else. And basically I moved abroad 10 years ago and I started my life as an expat and obviously had to deal with, all the parts of being an expat, getting the visa, learning the language, and of course, handling the taxes.
Exactly.
And back when I moved abroad, there were not really any good solutions to do your taxes. And so I figured with my Silicon Valley, kind of culture to say, well, if it's broken, let's fix it. And so now we have MyExpatTaxes. We're the leading tax software for Americans living abroad. We also help those that are living in the US that just have international assets. So maybe you moved from Europe or something to the States, or you moved from Asia to the States and you still have international properties abroad. And obviously you can't really put that into, the normal US tax softwares in the US. So that's where MyExpatTaxes is here because we understand the average person now has a lot more international wallet, so to say.
So I'd love to step back and actually hear more about your experience of moving abroad because I think people are just curious in general. Did you always have the desire to move abroad or was it something that serendipitously happened or how did it occur?
So I don't really think I traveled abroad until I went to college, right? And then it was like where I was from in San Jose, it was great. San Jose, California is a very diverse place. I think where I was specifically living in was actually not that super diverse. So I didn't really think of leaving it. People look like me and Vietnamese as well. So people spoke Vietnamese. And it was kind of like, well, this is our home. And California is just the best place in the world because that's what they also tell you every day when you live there, basically. And so I never thought about moving abroad. And I even remember when I first originally met my husband now, who's Austrian, the first time I met him, I said, I'm going to make it here in Silicon Valley. And if anything, I'll move to New York. If anything, I'll go to the other side of the country.
Oops.
Right. So that's like the big part of the world is to go to New York. So I did not imagine myself living abroad, definitely not in Vienna, Austria. But I guess that's the beauty of life, right? I'm a person that I really like to have a plan. I like to know what I want to reach in 1 year, in 3 years, in 5 years. But I'm also really flexible that if an opportunity comes and I see that the plan I have no longer makes sense, I have no problem shifting. And so that's basically what happened. I said I want to do certain things and I thought I would be in California to do them. And then I just realized, actually, I think I would be happier doing the exact same things on the other side of the world. And so packed up my bags on a Thursday, took a Friday off from work, moved to Austria. And then on a Monday, I was working at an international company at that time, an international IT company. So I took Friday off. And then on Monday, I just badged into their office in Vienna and then just took out my laptop and started working from Vienna. And that's how my move went.
Oh, wow. So you didn't have to go through a visa process, or how did
I did.
that work? Did you stay with your company and they sponsored the visa?
No. So my company said you can move, but you handle your own visa because I was moving from, I wanted to move. And so obviously what ended up happening was I went through, it's not the easy way, but a little bit easier. So, I went, got married, got that work visa, and that was a lot easier. I had things in place to help support me. So I can feel for the person that just wants to make the move and they maybe don't have a big support system. That can be incredibly difficult. I had a huge support system and I'm really thankful for that.
And what was that support system for? How did you find your own network and support system?
So, I mean, I had support systems on both sides. So I had my parents in my family and they were so supportive of me. I remember when I asked my mom, you know, should I move? Should I do it? And she always told me, hey, you can make money anywhere in the world, but you can't fall in love everywhere in the world. So you should go for it. In the worst case, just buy that return ticket, right? You can always fly back home. We'll help you, but you should at least try it. So I had that support system going out. And then on the other side, I had a support system that was welcoming me in. So obviously my husband was there. I was already engaged. I had his parents that were there to help me. It was, even his parents were trying to set me up with an internship before I moved, but I ended up just transferring my job. So that worked out really well.
Okay, that's wonderful. So let's talk a little bit about your transition and your developing your company. You saw a need, and I'd love to know, like, when your tech background in Silicon Valley, was it in the tax field or finance field, or was that completely unrelated and you just saw a need and you had the background and wanted to pursue that?
So I was in the finance field, so finance accounting. So I had that. It wasn't necessarily tax, but I knew
Hmm.
my way around an Excel spreadsheet, right? So that definitely helped me out. It was also nice that I was just very used to this thought process of if something's broken, if you want it fixed, you have to fix it yourself, right? Don't wait around for someone to make a solution for you. If you're capable and you're able, find some people to create that solution. And for me, I was just sitting there thinking, hey, I mean, apparently there's 9 million of us Americans moving about. You have all of these different visas now opening up where you don't have to get married to have a visa, right? I figured I'm not the only one struggling with this. This is really difficult because come on, like I have to file my taxes in Austria. That's already confusing enough. I don't know German at that point. I don't know what's going on. And then I remember asking my international company, which is like, it's a huge $1 billion company, like, hey, I moved. Can you help me with the US tax part? And it's like a full stop no. We don't
Mm.
advise on that. We don't help you on that. If you want help, you can go talk to one of the big four. I'm like, okay, I guess I'm more complex. I'll go talk to the big four. And then for them, it's like, well, you need to at least spend $2,000 for us to like have the first talk with you. And I'm like, I mean, I don't make that much money to pay that much to just have a tax conversation. And so that's really where it came was, like, come on, like we have to solve this. Like I have to solve it for myself, right? I have to do my taxes every single year. This is not going to go away. And then at the same time, I have to solve it for my friends that are going through the same situation. My best friend's also living abroad. And, how many other Americans? Because everywhere you go, you're almost always going to find an American. I always joke if we go to any conference, even if it's unrelated to US tax, right? If it's just maybe like a tech conference, a finance conference, I always say in that room, you will always find one American that moved abroad. So,
Hmm.
we're kind of everywhere. And that is really you we had to solve it. It was one of those things where it was just the time. I don't So anyways, I had the background. I had the very strong passion to fix it because it was my own problem. And I was really lucky that the people I had worked with at Cisco also had, the right skills to help me create that journey. So my co-founders were also from Cisco and they had, the operational skill set, the technical skill set, and all of those. And so we were able to, start the company together. We didn't have any investors and we really did it ourselves. We looked at it, we talked to, the different people that were affected, my friends, my community, all of that. And we just day in and day out went and kept chipping away at a huge problem and making it a lot more simple and easier to digest. So when we had first started the tax software, it was always like, okay, we'll just make it for simple people, people that are salaried, right? And then more and more people would come. And then now, we're the leading tax software because we can handle so many different cases. You can be salaried. You can have a foreign corporation in the UK or in Singapore. You can have foreign investments. You can have US investments. You can have foreign pensions, US pensions. You can do tax planning. You can, forecast your future tax return if you're selling a home, buying a home, renting out a home, regardless of the country. You can see which tax treaty benefits work out for you. And it's one of those things where, yeah, if you look at the problem in its own, it's a huge problem. But if you really spend the time and you talk to the people that you're working with and you take the time to understand their situation, you can figure out how to solve each case at a time. And then eventually you've solved a good 70, 80, potentially 90% of the problem.
Hmm. And taxes are incredibly complex, even as someone who's not thinking about moving abroad, just living in the United States. It's constantly changing. It's difficult. So what are the biggest things that someone thinking about living abroad, or maybe someone who's just moved abroad and hasn't gone through a tax year yet, what are the biggest things to look out for, what to know, that kind of thing?
The biggest thing is, you know, understand your income. Because it sounds simple, but I think that is what is difficult because you have to have all of this, you know, record keeping, right?
Mm.
You're doing your different jobs, especially if you're a freelancer, money comes in, money comes out. Maybe you're not necessarily keeping the receipts, maybe you're not keeping the invoices. That's where it gets really tricky because especially if you kind of delay that work and then you put it in a box and then when it comes to tax time it's really stressful. And so whether you're doing taxes in any country, the main thing is you do have to understand that there are certain pieces of information that you collect during the year that you have to store properly, right? If you're getting your pay slips, you need to keep that. You need to then, at least store it somewhere or even better, kind of start adding it up, put it in a spreadsheet and just keep, okay, well, this is this is from my salary job. And then maybe you have rental income and just have access to those records. And also, especially for, Americans, if you're investing or you have different, brokerages or pension accounts, is keeping track of all those forms that the IRS gives you. Because maybe you just put money in your bank and you don't realize that you're making interest because you don't see it, right? You just, okay, I'm just using my bank. And then you might not notice that they sent you a letter that you actually made $500 in interest income. And then you don't file that on your tax return. And then the IRS sends you a letter being like, hey, you didn't report all your income, and we have a record of it. So I definitely think, this is relevant for anyone. It's just the record keeping is the base part of it all,
Mm-hmm.
right? And just understanding, well, where are you getting income from? Because you might not think about it, like the interest in banks. Maybe there's some property that you had put through property management and you're getting rental income, but maybe even though the expenses are more than the income, and so you're like, well, I don't even make money, you still have to report the income versus the expenses separately. So I definitely think that that is the stressful part. And I mean, obviously it gets more stressful, right? Because you have the deductions and the strategies, but a good tax software is not going to make you think about that. That's not your job. Your only job is, what did I earn as income and what's my own personal situation? And then you can come to MyExpatTaxes, and then we shouldn't even have to make you think about, well, should you be using the foreign earned income exclusion or the foreign tax credit? Or, what about claiming this deduction? That's not your job, right?
Mm-hmm.
That's why you come to us. So I think it's to kind of try to just focus on, okay, I just have to understand what my income is, and then I can find a trustworthy, tax software or tax partner to kind of help me get through how to do optimizing, right?
Once a person knows, like, okay, I'm pretty square on the income and expenses and all that, and I'm good at record keeping, and they're really thinking about, okay, I want to move to Spain or Portugal or, wherever the case may be. What are the biggest things that they should know going into that move as far as the taxation? Because I know America is very different than most of the world as far as how we're taxed and how we have to report and the tax treaties and the double taxation. So can you explain it for us how that works?
Course. So I think the main thing is to realize that you should never be double taxed. That's why these tax treaties exist. Obviously, there are countries that don't have a tax treaty. So Singapore is an example where there may be situations where you can be double taxed, but generally, if you're moving to a country with a tax treaty, which you can research first, just it's pretty easy to just Google
Hmm.
that, ChatGPT it at this point, and just say, is there a tax treaty? If there's a tax treaty, generally, you should not be double taxed. Now, the next thing to know is obviously the year you move abroad and the year you maybe move back. Those years are a little bit more challenging because you have to just understand, well, where's my residency? How much does my new country tax me? Because normally when you move to a new country, they're not going to tax you on your worldwide income like the US does, right? They only tax you on the income when you became a resident. So those years are a little bit trickier because you just have to have good records. When did you move? When did you establish residency? And I think a big tip is for people that are freelancers or digital nomads. If you're thinking about living somewhere long term and you're a freelancer, almost in every country, if you're a freelancer, you have to register as a freelancer, and that's an extra registration. So I know in Portugal, that can be a tricky topic where you go there, you move there, and you establish residency, but you don't actually sign up for the Social Security as a freelancer or something like that. So definitely those are things to think about. Is if you're moving in a company, you're salaried, it's relatively simple because they're doing all that signing up for you. But if you are moving, as a self-employed person, think about those extra things. The other part, definitely, I would say, is okay, you check for the tax treaties. Even if there's not a tax treaty, it's okay because there's a foreign earned income exclusion, there's a foreign tax credit. So generally, just I think you should wipe the fear away that you will be severely double taxed. You generally will not be. The second one is just, if you are self-employed, a couple other things to think about, like signing up for Social Security locally, insurance, those things. Now, if you have obviously US assets still, so US property, US investments, things like that, you have to decide, well, how do you continue to manage that from abroad? Because you can still contribute to your US individual retirement account, your IRA
Hmm.
from abroad. You can still contribute to your brokerages, but you just have to think a little bit more, well, how do I manage that? How do I make sure I get my 1099s? How do I access it? How do I make sure I have my two-factor authentication on my new phone so that I can even access all my accounts when I move and I no longer have my US number? That one's a tricky one. Get the app, don't use phone number. I can I can tell you that. So, I think those are some practical tips when you're moving abroad. Now, when you're living abroad and you know, you're just thinking about tax wise, again, there's a couple basic pillars. So if you are a salaried person, you can use the foreign earned income exclusion, and that's quite a lot of money. So for tax year 2025, that'll be 130,000 US dollars. So you can earn basically 130,000 US dollars tax free, given that you are really living abroad for a full year, or you're at least physically out of the country for 330 full days within a
Mhm.
12-month period. So that's kind of the first thing, is like, okay, well, if you earn less than that and you're salaried, just there should be no tax, right, on your salaried income. Keeping in
For the
mind,
US. I just wanna clarify, that's not
yeah, for the
tax-free,
US.
and
Yeah,
so
yeah,
you're
for
going to
the
be
US,
paying
right?
taxes at whatever rate you are country you're in, right?
Yeah,
Okay.
yeah, that's obvious. Yeah, like, it's not so
Well,
much for the US. And then for your local country, obviously, whatever the tax local rates are, they will normally withhold from your paycheck, right? Now, the other part is you can always use the foreign tax credit. So you can use basically a dollar for dollar credit on any taxes you pay locally. Even if there's no tax free, you can still use the foreign tax credit. There's only a couple countries that you cannot use the foreign tax credit with. That's like Cuba, North Korea. But I assume you're probably not everyone's moving to those countries anyways.
sure.
Um, in any case, so that also helps with double taxation, because if you're paying income taxes locally, you can claim that on your US tax return. Now, obviously, if you're moving to a country with a low income tax rate, you may still end up paying taxes in the US, right? So if you are earning above the foreign earned income exclusion, so say you're in Singapore, where people make generally very high salaries. So maybe you're making 200K USD, but they have very low tax rates. In that situation, you're earning over the foreign earned income exclusion. You probably don't have that much, you know, foreign tax credits to pull from because they have a lower tax rate. So then you can expect to still pay some tax to the US. It's not double taxation. It's just
Mhm. Like
the
a
US
gap.
30%. They want their piece of the pie. If you didn't pay that whole pie to someone else, they want their slice. So that's generally the basics there. Now, if you have Social Security income, that's another level. So maybe someone is saying, well, I'm retiring and then I'm moving abroad and I have Social Security. How does that get handled? Because it's not salaried income. I can't use the foreign earned income exclusion, but I'm not necessarily paying foreign income taxes on it. And so what you normally do there, whether it's US Social Security or maybe it's a different country, right, that you're getting Social Security from a different country because you had worked there and you retired there, is normally you would then look at the tax trees. So the tax tree is a little tax trees are funny because it's very long and it like spells out everything. It's like, okay, capital gains income, rental income, and you can read it and be like, oh, well, this is telling me exactly that this country taxes capital gains and then this country doesn't. But if you're a US citizen, there is something called a savings clause in every tax treaty. And it basically says, as a US citizen, the majority of this treaty is really useless to you. You can't use any of it. You can't benefit from it. The US can still tax you. And so what it does have is it has a savings clause, and from that savings clause, there's a couple exceptions. And so Social Security is normally an exception. So you can use tax treaties for Social Security income. So basically, if you are salaried, you can look at the foreign earned income exclusion. That might get you, your salary tax free in the US, even if you're not paying, you know, a lot of local foreign taxes. If you have other types of income that's not salaried, or you just have a lot of salaried income, or you just don't want to use the foreign earned income exclusion for, there's a couple of reasons you might not want to use it. You can always use the foreign tax credit, just keeping in mind that if you pay less locally, then you pay the gap to the US. And then if you are retired or close to retiring, you have Social Security from any country, you normally look at a tax treaty. And then that tax treaty will tell you, okay, well, which country has the taxing right? And this also works both ways. So it might be that, if you have US Social Security, the US taxes it, but your local country doesn't tax it. So these are things you definitely have to look at, because obviously, you don't want to, if the other country is not allowed to tax it, you don't want to allow the other country to tax it. So definitely there are things to understand, but it normally goes with those three benefits: foreign earned income exclusion, foreign tax credit, or a tax treaty.
Okay. And so I guess this is a dumb
No dumb
question, but
questions. It's fact. Everything's confusing.
so for the most part, people are gonna be filing twice, once in the US and once in the country that they have established residency in, right? So do they need 2 different accountants? Like, how does that work? Because you're dealing with two different systems altogether. And does my expat taxes accommodate for that, or how does that work?
So it will depend on which country you're living in. So if you're in Germany or Portugal, we actually have basically in-house tax partners. It is still a different process, right?
Huh? Yeah.
At least then we're talking to the tax accountants to, understand what's going on. And they're looking at the US tax return and we're looking at the foreign tax return. But generally, our clients will do their local tax return first, and then they will do the US tax return. But you don't have to. You could, like what we always say is because the IRS deadline's a lot sooner, so it's already on April, right?
Hmm.
No matter where you live, you should at least start. So you start the tax return and then you put in your income because you should know how much you earn. You should know, do you have any type of US investment income, et cetera, et cetera. At least put in your income and then see what you may owe in the US. And then if you owe something, you can make an extension payment. And then basically you wait for your local tax return to claim any foreign tax credits. So maybe you don't even have to wait because we can eliminate the entire US, taxation upfront. And then in cases that you do or you should wait, you'll file an extension into October.
Gotcha. Okay. And typically abroad, when are the tax deadlines? So ours is normally April 15th ish, depending on holidays or where it lands. But and in other countries, that you said that is much later. What are the typical timeframes for the other countries' deadlines?
So it really depends. I mean, you have the
Okay.
UK that is operating on basically like an April to April basis. So I think their tax year starts on April 5th until
Okay.
April 5th. So just random.
Okay.
For anyone that's listening in the UK, I do think that that's very random because most countries are January to December. But basically in the Commonwealth, you have Australia, New Zealand, the UK, Hong Kong. They're all kind of random. Like
Okay.
June to July. Anyways, so those have completely different deadlines than the rest of us. But okay, if you are an American expat, if we're talking about US tax, your first deadline, think about obviously April 15th is still, because if you owe taxes, you should still pay by April 15th because technically interest and penalties are already accruing after April 15th. You don't have to file, but you should pay. But obviously you kind of have to file to pay. So it's like this chicken and egg situation.
Yeah.
Now, what you can do if you know you're not gonna owe any taxes, you can wait until June 15th. So June 15th is the actual deadline if you are living abroad or abroad on April 15th. So you can just wait till then to file. But in any case, you can always get an extension to October 15th. And you can do that as an American living in America as well to get that
Hmm.
extension. There's no harm in getting an extension. I know there's like people that don't like getting extension, but you can extend. There's nothing wrong with that. And most people will extend it because while I think the US, especially with MyExpatTaxes, we do tax returns very quickly, right? Because that's the whole point is that you go in, you don't have to dread it. So if you have your information ready, if you're ready to get started, like we can turn around tax returns extremely fast, especially around the deadline. We have different kind of support packages. Obviously, you can go in, do it yourself, and that's always going to be a very affordable tax package. You can have a tax professional looking at your tax return. You can basically have a tax professional really hold your hand through the process. And, that's something I'm really proud of is always on these deadlines, April 15th, June 15th, October 15th. People are so stressed because, human nature, we tend to wait till the very last second to do things. And
Yes.
as much as we tell ourselves this year's going to be different, it generally is never different. And so even on, the morning of April 15th, when obviously we're extremely busy, people will still be coming in. And depending on their situation, if they have everything ready, we can, we can turn around the tax returns that day. Right.
Mm.
And so that is, I think, a beauty of like the US tax industry is just we understand speed is important. I think locally, that's like, in other countries, I can't speak for all of them, but the people I have generally dealt with is like the more traditional tax accountants. I don't think speed is like necessarily something they're advertising. And so if you need to wait for a local tax return, even if it's, a normal January to December tax year, people normally don't get those tax returns until like, June or July or September. So it takes a while.
Okay.
But of course, not everyone needs to file a local tax return. So people that are salaried, they have their taxes withheld. They don't need to file anything extra. And
Oh,
so,
really?
yeah, it's okay. So America, everyone has to file a tax return. That's
Sure.
not the case in most countries. If you're salaried and you only have one employee, they why do you have to file a tax return? They have all the information for you. That's it. So you only have to file a tax return if you have, additional income that they don't know of. But
Mm.
for Austria, yeah, if you only have one employer, there's no reason to file another tax return. You only file a tax return if you're self-employed, if you have different types of investment income that obviously they don't track necessarily. You have foreign income, but just salary employees, most people, in the UK, they have pay as you go, pay as you earn. So they'll just have taxes withheld, and then you can file a US tax return based on that.
Okay. Okay. So in the case of people who are basically have multiple assets or an IRA or like a 401k, that's going to be very, very different. Like, because you still have American based assets that
Yeah, yeah,
aren't
then you're probably
reported to
filing
your
a local
employer.
tax return, right? Because
Okay.
obviously, your country doesn't know about all these things, and you're
Sure.
start earning a bunch of interest income, you need to report that somewhere.
Okay. So I read something the other day about FBAR. Is that how it's pronounced?
Yeah, yeah, of course.
What is it, and what should people be aware of as far as having those? The
Yep, so if you have foreign bank accounts, foreign pension accounts, any type of financial account for foreign brokerages, if if the maximum value of any of these accounts at any given point in the year converted to USD is combined over 10,000 US dollars, you have to file the FBAR report. And this basically says list all of your foreign financial accounts, even if they themselves don't surpass the $10,000 limit, list every single one of them. What's the account number? Where is the address that it's located? And what is your estimated maximum amount in this account, right?
hmm
So, like, even if, your parents transferred you $10,000 for school, they transferred to you, it hit your account, you immediately paid your bills. So it was gone in the same day. You
hmm
still have to count that $10,000 that hit your account, that was your maximum balance. And then even if you had maybe 5,000 in one account and then you transferred it to another foreign account, well, guess what? That 5,000 in bank account number 1 still needs to be counted, and then you count the same 5,000 from bank account number 2. So it's really the maximum value any financial account hit. Take that, convert to USD, add all the other maximum balances. If it's over 10,000 US dollars, you have to file an FBAR. And the FBAR is tough. It's not tough to file. It's very time consuming if you're doing it on your own. Obviously, our tax software will ask you for the information. We'll carry it over. So when you're doing it year after year, you just have to update the maximum values. Um, it's it's frustrating because there can be really high penalties. So if you don't file this form and the US finds out, technically the fines are like $10,000 and upwards. The US has really crazy fines when it comes to like international tax forms. So it's not a lot of them, but there's a handful of them that the fines are like $10,000, and I've actually seen some of them enforced. Like the major one is this foreign trust form 3520, and this that they are like sending out notices to people like you owe us $10,000 plus interest. It's
And
crazy.
what is that form?
That form is for foreign trust. So if you have like a certain foreign pension that isn't exempt from reporting, that
hmm
is. So it can get very complex, which is again, the point of a trusted tax software that understands the complexity. Because if you just go to a US based tax software or, some very cheap, hey, we can do your taxes for you. We don't really have any tax professionals, but we'll do your taxes for you. You miss a lot of these things. And it gets really scary because you never want to
Yeah.
be in a position where you're filing and you think you're compliant, but you actually missed really important forms. Now, going back to the FBAR is, you file this and then there's another layer on top of it. Because if you actually have, over a different threshold, so that's about 200K for those that are single filers, 400K for those that are joint filers. It's a little bit different based on if you're living in the US or if you're outside the US. And if you're looking at the maximum value during the year or the last day of the year. So don't get me started there. But if you pass that threshold, you have to file a second form, and it's called 8938. And then that form is the FATCA form, and that is basically the FBAR, but with like additional checkboxes, right? So it's just a more extensive version of the FBAR. Again, if you're not filing it, potential $10,000 penalty. And with that, you do have to file these forms because you could say, well, how would they ever find out? But remember, if I guess you wouldn't know, but if you're American and you are abroad and then you go to any bank in Austria, in
Mhm.
Australia, in the UK, in France, and you go, I want to open a bank account, like, okay, show us your passport. Pull out your American passport, and they will like, their eyes will just get huge, and they're gonna be like, okay, give me a second. And then they're gonna leave, and they're gonna come back with this giant stack of papers that's like, what is your US social security number, your address, all that stuff, consent that we can give all your information to the US Treasury. So that is FATCA, and that's why, it's a little bit of this known thing where international financial institutions don't really like Americans because
Mhm.
they have to report all of our information back to the US Treasury.
Okay. And although you're filing this FBAR, it doesn't necessarily mean you're paying taxes on it,
No,
or are
no,
you
it's just
paying taxes?
informational.
Okay.
It's
Okay.
just how much is in your financial accounts, but there's no tax calculated. So it's really, you need to file the form because it doesn't hurt you. It's just annoying, right? But
Mhm.
what tax form is not annoying, right? But
Right.
you have to file it because you have to disclose it because the US Treasury has information, but there is no tax calculated. Now, what I will say is the one situation where you can have tax calculated on that account is if you were living abroad, or let me start. If you just have international assets, so you just have international bank accounts, maybe from when you were a child, and then you've moved to the US 20 years later and you just still have them, or you know, any reason. If you have
Mhm.
international financial accounts and you've never filed the FR, this gets a little bit tricky because if you're living abroad and then you forgot and you never knew you had to file, you can easily get caught up and compliant through the streamlining filing compliance procedure. And it's an offshore procedure. It's for those that are living abroad for at least one of the last 3 years. We offer that on MyExpatTaxes. And there's no penalty. You just have to disclose everything. Obviously, if you owe tax, there's tax and interest, but it removes all filing penalties. So that's amazing because, you're living abroad, you forget, you can get caught up, even if you haven't been filing for 20 years. What gets really tricky though is if you have international assets and then you move back to the US and you didn't realize you had to report that. And then now you're looking to get compliant. They have the same procedure, but it's a domestic procedure because you haven't been abroad for at least one of the last 3 years. In this domestic procedure, they do have a 5% miscellaneous penalty, which means in the last 6 years where you had the highest, financial FBAR values, 5% of that highest value combined will be taxed. It is a
Okay.
penalty.
So
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 that's the
that's good
only
to know
case,
for
yeah, where
okay,
it's
so for anyone that's looking to maybe repatriate needs to be definitely aware of kind of
you
that
need,
situation,
yeah.
right?
If
Okay.
you're listening to this, you're about to move back to the US and you haven't been filing your US taxes. If you're listening to us and you just moved back to the US and you know you haven't been filing certain things, please get compliant within that first, 3 years of moving back or less, because you need to have at least 1 year of the last 3 years abroad. Then you can go under the foreign procedure and there's no penalty. But if you wait too long and you're going under the domestic procedure, that 5% can be pretty steep. We've seen that hurt for quite some people because it's looking at your bank accounts for the last 6 years. And if you had a lot of money in it, and it hurts. 5% is
Okay.
actually a lot of money, right? It can be.
Yeah.
Yeah. And it's just a penalty. It's not even like an income tax or something that you necessarily, or a social security tax that you can benefit from. It's just a penalty.
Okay. So what are the most frequently asked questions for people who are looking to move abroad, or even, people who are already living abroad, that you come across, and how do you address them?
So the main question is always, how do I handle the double taxation, right? And with that, I always say you have to understand, well, how much income tax did you pay in your local country? And once you know how much income you made in local taxes you pay, then we can look, does a foreign earned income exclusion make sense? Does foreign tax credit make sense? So we can definitely eliminate that US tax liability. If you are paying a lot of US taxes while living abroad, there's probably an issue and you should maybe look at your tax return. Obviously, if you have a lot of US source income that's not taxed abroad, that's a different story. But if you're paying a lot of tax abroad and you're paying a lot of tax in the US, it's probably something worth reevaluating. The next one is um basically when should people use the foreign earned income exclusion or the foreign tax credit. And so this really depends on a couple of different things. For example, if you have children under the age of 17, they have a social security number, and you have, you're earning over $2,500 in salaried income, then you probably shouldn't be using the foreign earned income exclusion if you're living in a country that you're paying, a good amount of taxes in, because if you use the foreign earned income exclusion, you get disqualified from the refundable child tax credit, the additional child tax credit. But if you use the foreign tax credit approach instead, you still get to zero US tax liability, but you can also get a refund of up to $1,700 per child. And so we have people that are so scared of filing taxes, and they go through MyExpatTaxes, they just do the streamlining procedure and they're like, oh, I'm going to owe so much. And they actually end up getting a lot of refunds because you can get a refund as an American abroad. So especially, now it's over with stimulus payments, but for the longest time, we were helping people file their taxes and they were getting all the stimulus payments. They maybe had children that were under the age of 17 with social security numbers. And then, they're filing 4 years of taxes. They're getting like $10,000 in refunds. And funny thing too is if you don't pay the IRS, right, you have to pay interest if you pay them late. If the IRS doesn't pay you, even if it's your fault that you didn't file, they also pay you interest. So it actually works both ways, and which is really nice. And so that's always a little bit of a nice perks. People to come in so terrified of their taxes, and they come out with like, well, just getting like couple $10,000 or something from the IRS. So I think that's a big question is, how do you optimize? And this goes to the next level, right? Like I said, it's not necessarily your job to understand how to optimize your taxes. That's what our job is. But there is a lot of optimization you can do. Like another thing is if you want to contribute to your US IRA in, back there, you might not want to use the foreign earned income exclusion because you have to have taxable compensation. And so if you use the foreign tax credit approach, you could still get to zero taxes, but then you have enough taxable compensation to then contribute to your US IRA. And so there's a lot of other levels to it. And so I think that's the second biggest question we get is just, how do you optimize? What approach should we use? And to that obviously depends on your unique situation. And that's the beautiful thing with MyExpatTaxes is because so many people ask us that, what we do now is no matter what plan you're in, whether you're in our do-it-yourself or you're in our highest plan, your tax return will always include an optimization schedule that says like, this is what your tax return would look like under the foreign earned income exclusion. This is what your tax return would look like under the foreign tax credit approach. And this is why we chose this for you. Because I also think that as a taxpayer, you obviously are not so savvy on all the different approaches. And so you're just putting all your faith into a tax software or into an advisor to do the best decision for you. And then they don't explain anything. They're just like, well, here's your tax return. Don't ask me any more questions, right? They're like, don't bother me anymore. And I'm like, well, I feel like as a taxpayer, you're entitled to understand why did they do the things that they did, right? Did I really optimize it? Did we really look for the best refund possible, right? I paid you this money and I am looking for a little bit of more assurance, right? That there was some thought put into this and not just paperwork. And so that is what we really try to do with MyExpatTaxes is that you feel like, okay, this is the best return we could have gotten. And then on top of that, like I said, in our higher tier, you even have access to our planning dashboard where even if you're done filing your taxes, you can go back in and then you can just go, well, actually, I do want to contribute to my IRA, but how do I do that? And you have this automated portal that goes, well, how much money do you earn? What's your filing status? Oh, hey, actually, you can't really contribute to a Roth IRA because now your filing status eliminates your ability to because your income's too high, but you could do basically a different strategy like a backdoor Roth IRA conversion. And this is how you do that. right? And I think that that is very powerful. So to go back is, how do I avoid double taxation? Generally, there's none. But of course, can happen in some rare cases. Two is what strategy do we use? And with that, I hope you use a good tax software or you have a good advisor that helps you walk through those steps
Hmm.
because there is a lot of moving pieces. And then I think the third one is just generally, after a while, like, how do I use my tax return to actually help me? So then that next level of, well, n- it's annoying that I have to file this tax return in the US and I don't live there. But then people start to realize, well, like, actually, I still I still have access to the US market. I can still invest in there. The US
Hmm.
market is obviously, now I can't say it's always a great market, but it's generally a good market, right? And obviously, if it's not a good market, I guess the whole world's probably not doing well either. But you still have the ability to invest in the US. You still have the ability to, contribute to US Social Security so that one day you get Social Security benefits. Because guess what? No matter where you live, the US, if you're a US citizen, they'll pay you your Social Security benefits. They'll they'll deposit that in your foreign bank account. The IRS will not give you refunds in a foreign bank account, but Social Security will give you money to your foreign bank account, right? And then you can still contribute, like I said, to your US IRAs and just how to kind of optimize for those situations. So when you're sitting there and you're going, well, like I did work in the US, but I don't have my 40 credits for Social Security. How do I get there? And so there's actually ways through your US tax return where you can technically still contribute. Or, you could then figure out, well, how do I claim a certain totalization treaty so that I can claim the credits I worked in Japan so that I could at least get some US Social Security. So I think that is kind of the next level. I wouldn't say that one's frequently asked, but it's starting to happen more as people get more used to the US tax return filing process and they don't, it's no longer this fear, but more of like, well, this is a tool. This is a tool I can do to ensure that, yes, I have to file two tax returns, but guess what? I can also, get benefits from two countries and not everyone has that benefit, right?
So, a question popped up in my brain, and where it can get complicated is the time of year that you're moving. I mean, obviously, it will make a difference if you choose a date in the middle of the year or the beginning of the year or at the end of the year. If someone's looking at planning out, 18 months to a year in advance of making a move, what's the best time to optimize that?
I think generally in the beginning of the year is easier, I would say, just because it's always a little bit cleaner. So, like, if you move in the beginning of the year, you have more time abroad. So, if you're looking to claim like the foreign earned income exclusion, you have more time physically abroad. So,
Hmm.
that's a very blanket statement. It really doesn't matter, right? If you ask me to tell you, I would say move January 1st because then it's clean, right? The
Right,
books are just
right.
clean and it's as straightforward as it gets. But you can move any time of the year, right?
Okay.
It's just a matter of, okay, when you do move, making sure that you establish the residency where you are abroad, making sure that you sign up the paperwork, you sign up for Social Security, you sign up to those things. Because the tricky part is just if you move and then you don't do all of the required paperwork where you are locally, because then, for example, if you're self-employed, like I said, there's a situation where we have clients that are self-employed and then they move to Portugal and they've been living in Portugal, but they didn't sign up for, they didn't sign up as a self-employed person. They didn't enroll into that Social Security system. And so they're filing their US tax return and they know they owe no income tax, right?
Hmm.
Because they are abroad for a full tax year. So we use the foreign earned income exclusion, but then they're subject to US self-employment tax, which is 15.3%. I mean, it's not that bad in the sense where, okay, at least it contributes to your US Social Security. That's fine. But then in Portugal, now they're subject to income tax there. So they're paying income tax, but then they're not paying into the Portuguese Social Security. So then it's kind of like this mismatch of, okay, you pay income tax in Portugal, but then you're paying Social Security taxes in the US. So I think it's not really a matter of like when you move, but just when you do move, making sure that you just understand the paperwork that you have to do locally so that you establish that you are a tax resident here, that, if you're self-employed, you are a self-employed person there and that you are in that Social Security system. So as an employee, it's easier because your
Hmm.
company does that for you. But if you're not an employee, you're going to have to go through a couple more steps. Just make sure that you're registered properly.
Okay, let me throw you one more curveball. You're moving. You live in a state like California where you have to pay taxes in California. Or do you facilitate kind of not only the federal return, but do you work on the state return as
Of
well?
course, you
Okay.
can't, you cannot N obviously, most expats don't have to file state returns because they have already moved out of the state, but we have so many people that, they're moving in, they're moving out, they still have rental property, they still have forms that say that they have sourced income there. They fly to the US, they work out of the US, they work out of California for 2 weeks, and then, hey, guess what? If you work out of California for 2 weeks, even if that is for an employer, that income, that daily salary you earned while sitting in California is technically California sourced income. And so we do also do state returns. And it's really important too to understand, okay, like, how do you do the sourcing of that? Because it's not always clear. Like we've had people come in and say, like, oh, they've been living out of California, but they get a pension. And they're still paying tax in California on the pension, but if you're not a resident of California, you shouldn't be paying tax on your pension,
Yeah.
right? And so there's also things, on one side, if you work out of California, your daily income is taxable. With the other side, if you have a pension, then that's not taxable. And so these are things that you have to understand. And also, where does residency start and end, right? So if you move out of California, did you really move out, or are you only intending to be abroad for a year? Because if you're only intending to be abroad for a year and you consider your stay temporary, then maybe you're still considered a full year tax resident and your worldwide income is still taxable in that state. So a lot
Okay.
of things to think about. But yes, my expat taxes, we also look at the state returns because there's a good chunk of people that still have state ties.
Good. Good to know. I think, like the more and more we get into it, the more questions pop up. And I think a lot of people have obviously very individual circumstances, and it's good to know. So I think this has been a great overview. So helpful to know. What's one thing you would say, and it doesn't even have to be tax related, having moved abroad yourself and enjoyed that life experience of living abroad? What's one thing you would say to someone who is considering a move and living abroad? What would you tell them?
I mean, it's so cliche, but you only have one life. You don't know when it stops one day. I think the world it's never been easier to do it. And it's just one of those things that if you wake up and you think about it and you think about it multiple times during the day, just try it. Just try it. Even if you're not moving abroad, even if you just go, okay, you know what? I just go for a month. I have the savings, and obviously it depends, of your financial situation. I'm extremely privileged. I'm not going to assume everyone has that same privilege that I have. But if you can do it, why not? Right? You can always get that ticket home. You can always fly out. You can always say, hey, I'm going to try this. And it's okay if it doesn't work out because it was a nice experience, I would assume. All right. But you'll never know until you try. And it's okay to try and not like it and turn around. And it's okay to try and like it and never turn around. Life is very fluid and just, you don't know what brings you happiness until you try different things.
I love that. So
Yeah.
can you give us just to kind of in parting an overview of all of the products and services that you provide and then how people can find it?
Of course. So myexpattaxes.com, that's the easiest way to find us. Obviously you can find us all over social media, My Expat Taxes. We're the one and only My Expat Taxes, right? We are the leading tax software. We really are looking out for you. So, like I said, you can go in, you can use our base package, which is essentially doing your taxes yourself. You can use our reviewed package where you enter your information, but then you have a tax professional just looking over everything. Like, does this make sense? Because you would be surprised how many times we look at a tax return like, well, actually, let me ask you a few more questions because some things don't really make sense in this picture. And then you realize, okay, yeah, like good thing I didn't submit this return. And then we have our premium package, which is okay. Let's have a tax professional look at your documents, make sure everything's entered in properly. You can even opt for a video call at that point and really just walk through that entire process. And then, of course, going past that, you have our planning. So after you filed your taxes with us, you can think, well, how do I optimize for the next year? I know I've just bought a house. I'm about to sell a house. How do I make sure that I can apply still for that US capital gains, 250,000 tax-free profit benefit. So things like that. So there's MyExpatTaxes. We have MyExpat Planning. Of course, you can go deeper, and we have another branch and partnership with MyExpat Invest. So if you're looking to actually invest as an American abroad, that you have the option to do that as well. And what can I say? I am you. I live abroad. I've lived abroad for 10 years now. And every year I live abroad, there's another problem that pops up. And my goal is solve it for myself and solve it for you at the same time, and make it as easy to use as possible so that you're not wasting your time thinking, oh, well, I dread this and I hate this process. And rather you feel more empowered and you go, okay, I have financial literacy. I understand where my income is coming from. I understand how much I make every year. I understand how much I pay in taxes. And then once you get to that basis where you're not just scared of doing the tax return, then you can even go further to say, hey, how do I save? How do I make sure that I get retirement income from multiple countries so that, I just have a bigger cushion to land on? How do I go further, right? If you want to start that company abroad, how do you do that in a way where you're prepared for how to file the forms and how to make sure that the taxation is okay? And so that's kind of my parting words is MyExpatTaxes. We're not just a tax software to help you file your taxes. We're really trying to make this process simple and understandable, but at the same time, incredibly accurate and comprehensive so that you know that you're covered. You know that you're not missing any certain forms, and that you know that when you go to us, you can trust us, that we understand your situation, and we want to make sure that you're comfortable and that you also feel empowered and that you like the process, right? As much as you can like tax filing. I'm not going to
Some
promise
people
you
may.
love it, but that you like it at least, or at least you don't hate it. Right?
Exactly.
That's my parting words there.
Great. Thank you so much for joining us. I think this has really been, it's helped me a lot as far as understanding a little bit more about the very complicated tax process and making it and simplifying it and having a resource that's really trusted and makes it a lot easier. So thank you for joining us. I really love this conversation.
Perfect. Well, thank you for having me. I'm happy to come back anytime.
And that's it for today's episode. Thanks for listening and spending some time with us. I hope you enjoyed the conversation. Make sure to follow the show and leave a review. It will really help others find us. And if you're dreaming about a life abroad or already living it, I'd love to hear from you. You can connect with me on Instagram at bargainhomesabroad or on our website, www.bargainhomesabroad.co. Until next time, keep exploring, keep dreaming, and I'll see you back in the armchair soon. Bye-bye.